So infinite banking is one of the most common search terms when it comes to cash value life insurance sales techniques on the internet right now. Influencers on TikTok, Instagram, and YouTube alike are kind of all over the map talking about infinite banking. Now, I think as you get into the infinite banking concept, it's important to understand that infinite banking concept is just a marketing term coined by Nelson Nash, who wrote the Becoming Your Own Banker book, created this movement of infinite banking. But really what he did is he took what some of the most successful people in the world have been doing for 150 years at the time that he started it, about 200 years now, and he turned it into a marketing term, and he's created a community, and that community has kind of evolved, and they have a philosophy that really follows Austrian economics and follows really personal liberty and personal control, and they kind of skew a little bit more towards the libertarian mindset, more conservative certainly in values because of their value on control of capital and self-accountability. And so that's one of the reasons that I am really drawn to the infinite banking concept in general. Now, full transparency, there are authorized infinite banking practitioners. There are some that do things really well, and there are some people I see out there, even authorized infinite banking practitioners, that are not doing things on the up and up in the way that they're creating content and talking about things in certain ways. That said, the purpose of this video is to talk about what's going on the internet, on social media, TikTok, Instagram, and YouTube especially, and how Index Universal Life agents are positioning, trying to say that Index Universal Life is a better, more enhanced way to do infinite banking. By the time you get done this video, you're gonna understand that is not the case, and you're gonna understand completely why. That way, next time an IUL agent tries to tell you that Index Universal Life is a better way to do infinite banking, you're gonna be able to counter that and kind of tell them how and where they're getting it wrong. So if you haven't already, make sure you subscribe and hit the bell. That way you're notified every time I launch a new video. Let's get into it. Hey, what's going on, Cashflow hackers? It's Chris with Life 180. In this video, we're gonna be dispelling or debunking, as some people would say, the idea that Index Universal Life is a more enhanced way to implement infinite banking in your life. And so I know there's a lot of content out there talking about that fact, and by the end of this video, you're gonna know everything you need to know to make a more educated decision. And if you're an Index Universal Life agent, hopefully you really take the time to really internalize what I'm about to share with you. So I think before I get into any of the technicals, the thing that I want to really touch on is all of the content that I see about infinite banking when it comes to Index Universal Life being a better way to implement infinite banking always stems around the fact of focusing on the positive arbitrage component of infinite banking. Now, if you think that positive arbitrage or positive spread is what infinite banking is all about, you're getting it completely wrong. Infinite banking is more of a practice, not a product, right? So while you need certain things, absolutely, in a product, it's more the attributes in the product that are important, right? It's not the function of positive arbitrage. Can you earn positive arbitrage in certain situations? Sure. Is that what it's all about? Absolutely not. And so any agent that's telling you that Index Universal Life is better because of a positive arbitrage component and the fact they illustrate these index loans and you can have this positive spread, which by the way, on IUL illustrations right now, it looks good. They illustrate that way. And I guess that's the first reason I would say that you cannot use Index Universal Life for infinite banking is because you cannot, you're not going to get positive arbitrage over the long run. In fact, if you look at an IUL illustration and you read the fine print, it straight up tells you that you are you're increasing the chances of the policy lapsing dramatically by taking policy loans. Although on the illustration, they have 50 basis points of positive arbitrage every single year baked into the illustration. Now, I want to take a minute and explain this. There's some regulations that kind of drive illustration regulation and how illustrations are built with every company across the board. And so the regulation that kind of manages this is a regulation called AG 49A. Now, right now, AG 49A is getting updated, and by the middle of 2023 here, Regulation AG 49A is going to be updated, and with that update, they are eliminating the ability to illustrate positive arbitrage. And the reason they're doing that is because a lot of the smoke and mirror games that's been happening with IUL agents, showing this and kind of positioning it as something it's not, that's all going to come to an end. And so it's important that you understand the concept and the philosophy and realize that infinite banking is not about positive arbitrage. It's about you controlling the banking function of your life. It's about you building a financial foundation based on security, liquidity, guarantees, positioning yourself for opportunity, all these things that you cannot do with IUL. So for the rest of this, what I'm gonna do is I'm gonna go through the reasons that Index Universal Life does not work for infinite banking. All right, so the first reason I would say is that with an Index Universal Life policy, you don't have control over the moving parts of that policy. Now, infinite banking, once again, it's not about arbitrage. It's not about having positive spread on loans and earnings and all this stuff. Once again, that's a benefit that absolutely can happen, but it's not what it's all about. It's about control. It's about building our liquid, safe, accessible capital up, building the financial foundation of our life on a financial vehicle that has just amazing guarantees, that has growth that will be inflation, that will position you to be able to get closer and closer and closer to your financial objectives on a guaranteed basis every single year, right? It's going to be a financial product that helps you operate more efficiently in your life in the way that you can make major capital purchases, in the way that you look and filter opportunities through your life to figure out, is it the right opportunity for you or not? Do you have this asset that you can leverage and collateralize in ways that will just completely change your life? One of the things that Nelson Nash says is that when you have these policies, opportunity just has a way of tracking you down. And that's really why, one of the reasons I call it an opportunity fund, because I believe everybody has to have an emergency fund, and I believe everybody has to have an opportunity fund, because when you capitalize yourself properly and you have access to that capital, opportunity will have a habit of tracking you down, especially in times of hardship, when most of the other people in the world around us are struggling. If you have one of these infinite banking type policies, opportunity will have a way of finding you. And so, when we look at this, it's about control. And when we look at what we need in a policy, when we compare whole life to Index Universal Life, the reason it has to be whole life is because as soon as you sign on the dotted line with a whole life policy, you, the policy holder, have all the rights in your favor. All of the risk, all of the obligation to meet the contractual components of the illustration fall on the behest of the insurance company, on the insurance carrier, and they have to meet all those obligations. They are beholden to you, the policyholder. Now, on the flip side of that, with an Index Universal Life policy, it's the complete opposite. When you sign on the dotted line for an IUL and read the policy, listen, the policy illustrations for a whole life policy are typically between 18 and 20 pages. A policy illustration for an IUL is between 40, typically maybe 38 pages, and I've seen them as long as 60 pages. So they don't make them that much longer for no reason. It's because all the technical jargon and the legal jargon, and the more legal jargon there is in there and disclaimers, I promise you it's not in your favor, the policyholder. It's always in their favor. It's just making it more complicated. And at the end of the day, what happens is as soon as you sign on the dotted line, you're basically telling the insurance company, all right, I'm looking at this. I realize that these illustrations are not guaranteed. And I'm signing away saying, I understand that moving forward, you, the insurance company, have the legal right and ability to reduce the performance of this policy if you need to, right? And the insurance company can do that for whatever reason they want. Now, am I saying the insurance company is going to try to scam you? Absolutely not. They're not. But there are elements and costs and fees and the way the options market works and the way the general fund creates an options budget and the way all these things work, and it's a much more complicated thing I have a lot of videos on for IUL, but the way these things work a lot of times, and what's happened over the past decade, is insurance companies have had to reduce the performance of these policies just because their costs went up. That is a variable that you cannot control. That is why I created the IUL challenge. That is why IUL policies that are sold on the upside potential and downside protection, they didn't gain or capture upside in the greatest bull run of all time. So if that's the case, where's the upside? If they didn't capture upside in the greatest bull run of all time, what are they going to do in the down years, right? And so that is reason number one that you cannot use Index Universal Life for infinite banking, is because of the fact that you do not control the moving parts and all the risks inside of the policy. You are a profit center for the company, not a shareholder of that company, effectively, that participates in the profits of the company, like with a participating mutually held company. So that is reason number one. The reason number two is that policy loans inside of Index Universal Life can spin completely out of control. Now, with a whole life insurance policy, it's very, very clear what your policy loans are, what the dividend payments and interest crediting to the policy are going to be. It's very fixed, it's very controllable, it's very transparent, it's very clear. The challenge with IUL is that's not the case, and unfortunately, the older you get, the worse it gets inside of IUL. It won't be so bad out of the gate, like as you're in your younger years when the policy is more immature. It's other reasons that are going to hurt you early in the policy that I'll get into after. That'll be the next point. But really, when you look later in years, in the later years of the policy, and you look at how policy loans can stack up against you if you don't manage them properly, they can get out of control. Now, what I want to do here is I'm going to actually share my screen a little bit, and I want to go into an actual policy. This is an illustration that just kind of shows how the loans work here. Now, so you can see here, this is the index loan option, and this column right here is showing, okay, they're taking income. So this is a 68-year-old at this point in time. They started this policy young. It's 51 years old. So I think it was a 19-year-old that started this policy. And you can see by the time they're 72, they've taken 1.7 million of income, right? This is showing that that you have a total loan charges of 1.3 million, loan credits of 1.5 million. So the spread between here, this is what I'm talking about is this spread is a positive of whatever $200,000 in change of positive arbitrage. That's positive spread, because the illustration rules with AG 49A allow 0.5% of positive arbitrage every single year in the policy illustration, but the reality is that's not going to happen. So AG 49A is getting updated to AG 49B, and they're eliminating this ability to illustrate. So this alone will not exist in the future once this launches in the middle of 2023. So it's important to understand that. But as we go down through here, look at this outstanding loan balance right here of $3 million, right? So think about it this way. And this is where loans get out of control, because you're using index loans. With a whole life policy, this cannot happen. So you have controls of this variable. In this policy, in a year where it goes negative, you can see the cash value here is $465,000. That has to be managed, right? Now, this is not the page showing the death benefit and the net amount at risk. There's other elements to this that are important. But let's just call this $3 million. If you got a 5% index loan, on $3 million, that's $150,000 of interest expense alone. Now what's going to happen with that? That is got to be paid somehow. What's going to happen to it? It's going to get pulled out of this 465, or you're going to have to cut a check for $150,000 in this scenario. So this will spin out of control. This will cause this policy to lapse. By the way, if this happens earlier in the years, this could happen when you're in your 50s, and it's going to be still pretty catastrophic, right? The loan costs compound against you. You can see by the time you're 92 years old, you have a loan cost of $10,700,000. So you have to manage that 5% loan fee on that, so the market has to do at least that 5%. The index has to perform at least that 5% rate. Every year it doesn't, this fee will just decimate the policy performance. And so this is one of the main reasons that you cannot use Index Universal Life for infinite banking, because that policy loan runaway risk, the cost risk on that is so astronomical and so real that you just can't avoid it. And it's going to happen. It's inevitable that you're going to run into that problem at some point in time. And the insurance company knows it, and they're putting you in a position where they're in control and you're not. So that goes back to point one, is control is the most important thing. You don't control these variables, and so therefore you can't use it for infinite banking. So the next reason I would say that you can't use Index Universal Life for infinite banking is because of the surrender schedule. Now, most IULs have a surrender period of between 10 and 15 years. And what does that mean? That simply means that as you build up cash value in the policy, there's a surrender cycle or period attached to it, meaning you don't have liquidity and access to all the money that's actually growing in your policy. So if you want to utilize infinite banking for major capital purchases, for real estate investing, or for other kinds of cash flow investment opportunities, you're not going to have access to all your money because of the surrender period. And it slowly, more and more and more will become available. But for all of your money to be available to you, you have to get through that surrender period. And that can be a period of 10 to 15 years for that to happen. With whole life insurance, there are no surrender periods. What you see is what you get. And we can show how very predictably you can have 90% liquidity of every dollar that you put into your policy starting year one. And the policy can start growing by more than your premium beginning in year two. And you have liquidity of the majority of that money right out of the gate. And so that's really important to understand. And that is one of the reasons that whole life, that attribute of whole life, that control of whole life is one of the reasons that you need to use whole life for infinite banking. So the final reason I would say that you can't use Index Universal Life for infinite banking is because the guarantees are just not what you need them to be. And let me show you an example on an illustration just to kind of illustrate my point here. Now, when we look at the guarantees, do I believe we're ever going to have to rely on these guarantees? The answer is no, not completely. I think the truth will lie somewhere in between expectations and what this shows here. But when we look at the guarantees, you can see in this particular illustration, we got $164,000 of premium being put in for somebody who's young. They want to fund it between 18 and 27 years old, $16,421 a year. That's $164,000 of premium. And then you can see they just stop premium, right? That just stops. And so they have the accumulated value. This one is actually structured way better than most IULs that I see. The cash value, the accumulated value, is a much better blend, usually on a $14,000 number. The cash value or surrender value would be much lower. So this one's designed pretty well, but it's still not where it should be comparatively speaking. In a whole life policy, for instance, this number is, you would have access to this $14,000, not the $11,332, right? So that's important to understand. But when we look at the guarantees as we go down through this, we can see that this policy is growing, it's growing, it's growing. At year 10, you put in 164, you've got $140,000, and you can see this one actually has a 15-year surrender period because the amount available is only the same starting in, oh, wait, maybe not that. I might be wrong there. No, it looks like it's a 12-year surrender because they get even right there. So 12-year surrender period, year 13, they get good, and that is what it is. And so that's fine. But as we look at this, you've got less cash available than what you've contributed, right? And the policy starts to eat into itself. They haven't even taken income yet. And you could see for this person, even though they funded $164,000, you're running into a situation where they're only able to take $103,000 of income at age 52. Their policy runs out and it lapses. So they're going to either have to put more money into the policy or it's going to lapse. And that is one of the reasons, like these costs inside of the policy that can get out of control on you. It's a real thing, right? And so one of the things I want to do actually now, I'm gonna skip here, and I want to actually pull something up. So here we go. I want to show this. This is a policy charges ledger in an IUL policy, and this is that same policy that was actually designed pretty well. From a cash flow perspective, you could see $164,000 of total premium that went into it. This is the non-guaranteed side of it. This is assuming that you were able to, get the returns as illustrated, which honestly will never happen. And this is assuming the different riders and the cost of insurance, because remember, you can never pay up. This is an element of control that I want to focus on for a second. With a whole life policy, you can fully pay up the insurance policy, meaning no more expenses for insurance. You can control that variable, that cost. With an Index Universal Life policy, you can never control that cost. As you hit retirement, Agents will tell you, well, the net amount at risk is going to be better, so the cost of insurance is going to go down. But the problem is you're fighting father time and you're getting older. And as you get older, even though the net amount at risk can go down, because the cost of insurance per $1,000 of insurance goes through the roof, the older you get, the costs get out of control. So you can see here, this shows this total policy charges. I just want to focus on this. You've paid $164,000 if this were you in premium for this policy. Total policy charges are $946,000 in this policy at age 97. So if you live that long, which by the way, I would bet pretty much my life that this policy would lapse before that and you might not run into this issue. But let's say it does. You can't control the charges in this, and that's an element of control. Obviously, that's a negative. And $946,000 in policy charges for a policy that you only paid $164,000 of premium. So when IUL agents try to tell me that IUL is an enhanced version of whole life insurance, yeah, it's enhanced for the life insurance company. Think about it, use common sense. How would a life insurance company be able to get you better returns than their general fund, right? If they could get you those returns, why wouldn't they be doing it for themselves if it was so safe? How can they pay agents higher percentages of commission on a case-by-case basis? If you understand IUL and whole life has what's called base premium and paid up additions, and IUL has what's called target premium and overfunded premium, right? And so those are the comparable things, apples to look at. So if you just like funded an IUL at target and funded a whole life policy at base, an IUL agent is gonna make a lot more money, apples to apples, right? And it is what it is. And so you can't, how can an insurance company pay higher commission and still have the policy perform better? It doesn't work. When you start utilizing common sense, you start getting through the noise, you start kind of seeing through the garbage and realizing this is not what it's being sold as. It's the most misrepresented financial product on the face of the earth. And when we start thinking about, like from an infinite banking perspective, the attributes that we need the asset to perform for us and give us control and allow us to have the guarantees and the liquidity and all of the elements that are going to help us beat inflation on a long-term basis so we can go take and make our other investments better. That's what infinite banking is all about. Utilizing IUL for that simply injects more risk into the policy because IUL is an investment alternative and it's a bad one at that. Whole life is a savings alternative, and the attributes that you need for infinite banking are savings alternatives, not investment alternatives. So I hope that makes sense. If you have any questions, comment in the comment section below. If you haven't already, make sure you subscribe, hit the bell, that way you're notified every time I launch a new video. I'm doing videos like this all the time. That's it. Till next video, have a blessed, inspirational day. We'll talk soon.